Yeah. Hello, and welcome. What we have here today is a study session, and this one will be short and sweet. And today we'll be going over reading price action with me, Super. And like I said, this one will be short. And what we will be doing? What are we going to be doing today? Learning about the two most used price action visuals is what I call them. And that would be the open, high, lows, close bars and the Japanese candlesticks. We're going to learn how to read them and further our technical analysis skills. So jumping right into it, let's break. Actually, three quick reading tips for technical analysis before we jump into it. We're always reading from left to right, reading it from left to right. So we're always going to be reading it from left to right. And one thing that I think maintains whether it's the open high lows candles or the Japanese candlesticks is that it opens on the left and closes on the right. And each one of these bars or candlesticks is a representation of time, and that time is dependent on the chart time frame that you're looking at. So on the 1 minute, each bar or each candlestick is representing 1 minute. On the 1 hour, each bar, each candlestick is representing 1 hour. On the week chart, each bar, each candlestick is representing one color. Is representing 1 week, and so on and so on and so on. So just jumping into it, the open, high, lows, close bars. So each one of these things here is important. Open, high, low, close. That's what it's broken down into. And then on the right here, you can actually visually see. So what we have visually represented in this bar, we got the high, which is the peak, that's the top. Open, high, lows, like I said, it stands for OHLC. That's the shorter term, but it's basically open, high, lows bars. And this is what it represents. The high here at the peak, that's the high that the stock or the commodity or whatever you're tracking reaches in this time frame that's represented on the chart that you're looking at. And then over here on the left, like I said, it always opens on the left. Whether you're looking at a bar or whether you're looking at a candlestick, it always opens on the left. So you got this bar here, which is indicating the price level at which this stock opens up. You got the high, which is the peak there. Then you have the low, which is the low here. The crevice, or the peak, or the low. I don't know another name for low. But this represents the time, the price level for the lowest price that this stock trades within the time frame that you're looking at. And then lastly, you have the close on the right. Like I said, we're reading it from the left to right, so it opens on the left, closes on the right. So you got your bar there representing the price level that this stock closes at, depending on the time frame that you're watching it on your chart. Sorry, I had to take a mental break there. So we just went over, an up candle or up bar. In reverse. You still have opening on the left. So this is a down bar. What we just went over was an up bar. So that would be an up bar, aka a bullish bar. Now we're going over a down bar, aka a bearish bar. So we still have price opening up on the left, representing what price is when this this bar opens up on whatever time frame that you're looking at. Then you have your high, which is your peak, You have your low, which is your crevice, all the way down there, kind of at the bottom. And then you have your close, which is a little bit above the low. You got your closing bar, which is on the left, which represents the price level which this stock closed at on the time frame of your chart. So everything is kind of visually represented with the arrows and stuff, kind of telling you what it is, but it's just a visual representation. This open, high, low, closed bar is a visual representation of the open, high, low, and the close of the stock price. It shows you where the price opens at for the day, where it closes for the day, the high of the day, and the low of the day, if your chart time frame is the daily. So these candles will represent whatever time frame your chart is. And bars. The candles and bars will represent whatever time frame your chart represents. Okay. Going into the next, Going into the next visual representation of price action, we got the candlesticks, commonly known as Japanese candlesticks, and they too represent the same 4 factors: open, high, low, close. So over here on the right, you have your visual representation, and the bodies also represent the range between the open and the close. So here, again, we have it opening up on the left. So that price there, this line level, represents the opening price of this candlestick. This wick here, the high of the wick, represents the high, the highest price that this stock or whatever equity that you're looking at, commodity, whatever price action you're looking at, reached the high at the top of this wick, depending on whatever time frame you're looking at. And then over here on the right, you have your close, always represented on the right. So open here, closed here, that's why this candle is red. And then down here, you have your low, which is the lowest price that this stock reached in whatever time frame your chart is reflecting. You got your low right there. So you got your open on the left, you got your high represented by the top of the wick, you got your low represented by the bottom of the wick, and then you got your close on the right represented by the bottom of the body. Open represented by the top of the body. Open is higher than the close, therefore this candlestick is red. And the reverse, we still have the open here, represented by the low of the body of the candlestick. Then you have your high, still represented by the top of the wick, and then you have your low, represented by the bottom of the wick. And then here, you have your close, represented by the top of the body, on the right still. So here, you have your open, lower than the close, therefore the candle is green. The close is higher than what it opened at, so the candle is green. Bullish, going up. Open is higher than the close, that's bearish. Price went down. Pretty simple stuff. So then we have the verses. They pretty much show you the same thing as we just went through. The open, the high, the low, and the close. Both of these represent the open, represented on the left here, and represented on the left here. They represent the high by the top of the wick, the top of the wick. They represent the low by the bottom of the wick, the bottom of the wick. And then they represent the close on the right. Here, represented by this bar. Here, represented by the top of the body. Represented by the top of the body. Top of the body. Okay. Going on to the next and the very last slide here is just candlestick kind of psychology, strength wise. Okay, lastly, we have here cool little infograph and some information that I wanted to provide about the different types of candlestick strengths and kind of the psychology or the knowing that goes behind what the candlestick is doing. So basically, what the candlestick is doing, it could be buying, it could be a selling candle, it could be an indecision candle, it could be an upper price rejection candle, it could be a lower price rejection candle. And that's visually being represented here on the right. So as far as buying candles, all of these on the top here are buying candles, types of buying candles. So you have a strong buyers and in full control type of candle here with this thick body with no wicks. And then you have this candle here where you see that there's lower price rejection as represented by this long wick. So at a certain point in time, the price was all the way down here. And this candle probably looked more like this candle here. But the buyers came in and drove the price all the way back up. So now that the candle looks like this, what we see here. So sellers showed their strength initially, making it look like this, but then the buyers came in and they outperformed the sellers, taking it back up and making it look like a hammer here. And then the next one we have, just going further, making it look like a hammer. So like I said, just reiterifying or going back again, saying that this is lower price rejection as represented by this long wick right here. Lower price rejection. The next one is indecision as represented by this price action here, this thick kind of doji. And it's kind of in the middle. It's like stuck in the middle of this whole candlestick. It's just sideways. It's like a thick doji. Normally you'll see like no body, but this one has a body, but I just like to call those fat dojis. But it's a representation of indecision. And then here you have upper price rejection. So with this, at one certain point in time, the price action was all the way up here. So this candle here actually looked like this at one point in time. But then the sellers came in and drove this price all the way down. So it now looks something more like a hammer that's flipped upside down. And this is bad if you're bullish or you're expecting price to go up. So again, this is a reflection of buyers initially being in control, and then the sellers came in and outperformed them, causing the price to go down, creating lower price rejection and creating this hammer type of shape that looks like a hammer that's flipped upside down. And then we just have the same thing in reverse. When price action is going down, you have candles like this thick red candle, this thick body with no wicks. And then the next thing we have is the reverse. We have this upper price rejection, which is good for bearish action, price action. Basically, buyers showed strength, so the candle looked like this, but then the sellers came in and drove the price down. So now it's down here and it looks like a hammer that's been flipped upside down. Basically this same thing here, but when you see this is good. This is good for bearish. So in a bearish trend, that same type of candle is actually beneficial to your trade, and vice versa, as we'll see later. Again, we have this candle stuck in the middle of the candlestick. So we have this body stuck in the middle of the candlestick, and that's just again a form of indecision. Whether it's a thin indecision or a fat indecision, it's still price going sideways instead of going up or down. So it's stuck, it's indecisive. And then again we have this candle here, which is a reflection of sellers actually initially being in control. So initially this candlestick looked like this, but then the buyers came in and drove this price all the way back up, making it look like a hammer. So initially, the sellers were in control, but then the buyers came in and outperformed them, making this look like a hammer. This is bad for bearish action if you're thinking that the price is going to be bearish. And I believe that's actually everything. So if you have any questions, comments, or concerns, you can reach me on the social media platforms at Sofa King Super. That's Sofa King Super. That's also IG, Twitter, and Discord. So you can find me, DM me on those platforms if you have any questions, comments, or concerns. And I thank you all for watching this, and thank you for your time and consideration. As always.